A lot of people assume paying off their mortgage early is automatically the smartest financial move. And emotionally, I completely understand why. No mortgage payment sounds amazing, but financially, it's not always that simple. In some situations, paying off your mortgage early can be a fantastic decision. And in other situations, it can quietly cost you hundreds of thousands of dollars in long-term opportunity. I'm going to show you exactly what I mean in a minute. In this video, I'm going to break down when paying off your mortgage early actually makes sense, when it probably doesn't, and how extra principal payments actually work, the pros and cons of biweekly payments, what mortgage recasting is, and how to think about the opportunity cost of using extra cash to pay down low interest debt. Because this is one of those topics where people tend to think emotionally first and strategically second. And by the end of this video, I want you to feel clearer, more confident, and more capable of deciding what makes sense for your situation. Let me start by saying this. There's nothing wrong with wanting your home to be paid off. For a lot of people, that represents security, peace of mind, freedom, and lower monthly obligations, especially as retirement gets closer. But here's how to think about this. A mortgage is not just a debt. It's also a financial tool. And whether paying it off early makes sense depends on your stage of life, your cash flow, your interest rate, your investments, and your long-term goals. This is where people often feel stuck because they hear two completely opposite opinions online. Always pay off your mortgage ASAP or never pay off cheap debt. And honestly, neither extreme is completely right. This is about strategy. And if you're trying to create a smart long-term financial game plan, I've got a 90-day homeownership game plan in the description that helps you think through these decisions step by step. Before you aggressively try to pay down your mortgage, you need to understand how amortization works. Mortgages are heavily interest loaded in the beginning. That means in the early years, a larger portion of your payment goes towards interest and a smaller portion goes towards the principal. Then over time, that gradually flips. Let's say you have a $400,000 mortgage at 6.5%. Your payment may be around $2,528 a month for principal and interest. But in the early years, a huge chunk of that payment is interest. And this is the part most people never actually see. They're making payments every month, but they don't realize how slowly principal reduces at first. This is why extra payments early in the loan can have a much bigger impact than later. Understanding amortization helps you understand where extra payments actually make the biggest difference. This is probably the biggest mistake I see. People send extra money towards their mortgage without verifying where it's actually going. You need to make sure the additional payment is being applied directly towards the principal, not future payments, escrow, or just sitting there incorrectly applied. Here's where most people get this wrong. They assume the lender automatically knows what they want done with the extra payment. Not always. Call your lender. Ask, do you allow additional principal payments? Is there any prepayment penalty? How do I make sure the extra funds apply directly towards the principal? Because if the money isn't reducing principal, you're not getting the benefit you think you are. Never assume extra payments are being applied correctly. Verify it. If this is helping you think about your mortgage more strategically, go ahead and subscribe. My goal is to help people make smarter long-term financial decisions, not just emotional ones. Now let's talk about biweekly payments. This strategy gets talked about a lot. Instead of making 12 monthly payments, you make half payments every 2 weeks, which ends up creating 13 full payments per year instead of 12. Using that same example, a $400,000 loan at 6.5%, making biweekly payments could potentially shave years off the loan and save tens of thousands of dollars in interest over time. But here's the balanced truth. Biweekly payments are not magic. What's really happening is you're making one extra payment each year. And here's how to think about this differently. You can often accomplish something similar by simply adding extra principal monthly while maintaining more flexibility of your cash flow over time. Biweekly payments can automate discipline, reduce interest over time, and accelerate the payoff. But they can also reduce monthly flexibility, complicate budgeting for some people, and not all lenders process them efficiently. Biweekly payments can work well, but understand why they work, not just that they work. This is something a lot of homeowners have never heard of: mortgage recasting. A recast happens when you make a large lump sum payment towards principal. Then the lender recalculates your monthly payment based on the lower balance. This is the part people find really interesting. Your loan term and interest rate stay the same, but your monthly payment drops. Let's say you receive an inheritance, bonus, or sell another property. Instead of refinancing, you may be able to recast. Now, recasting is typically only available on a conventional loan, and every lender has their own process and rules. So before assuming it's available, call your lender, ask about eligibility, ask about minimum lump sum requirements, and ask about the fees. Recasting can lower your payment without refinancing, especially after a large principal reduction. This is where the conversation gets really interesting. And honestly, this is where I think people should slow down and think strategically. Paying off your mortgage early does not automatically mean it's the best financial move, especially if your mortgage rate is low and your investments are earning significantly more. I worked with a client who had a 3.25% mortgage rate, and their investment account was averaging over 10% in returns. They were considering pulling money out of their investments to pay off their mortgage. So we talked through the math together. If your investments are growing faster than your mortgage interest, paying off the mortgage early could create a significant opportunity cost. And this is where people feel conflicted, because mathematically, investing may make more sense, but emotionally, having no mortgage feels safer. Here's how to think about this. Do you value peace of mind more or maximizing long-term growth? What stage of life are you in? Are you approaching retirement? Are you still in your wealth building years? Now compare that to another client I worked with. They were about 5 years away from retirement, and they knew their income would drop significantly afterwards. In that situation, paying off the mortgage early made a lot of sense. So we calculated exactly what additional payment they would need to make monthly to eliminate the mortgage before retirement. And we also verified the extra payments were being applied directly towards principal. This is why there's no universal answer here. The strategy depends on your goals, your cash flow, your timeline, and your opportunity cost. The smartest strategy is the one that fits both your financial goals and your emotional comfort level. And if you're trying to figure out whether paying down your mortgage faster makes sense for your situation, this is exactly the kind of strategy conversation I help people work through every day. If you're thinking about buying or refinancing and want clarity on your specific situation, I'd be happy to help. There's a link in the description where you can schedule a time or grab one of my free guides to get started. Let me leave you with this. Paying off your mortgage early should be about opportunity cost, not just cash flow, because sometimes paying it off faster creates peace of mind, and other times keeping a low interest mortgage while investing the difference creates significantly more long-term wealth. Neither is automatically right or wrong. The goal is understanding your numbers, your options, and what trade-offs you're making. Because when you understand the strategy behind the decision, you stop reacting emotionally and start making intentional financial choices. So if you're thinking about paying off your mortgage early, don't just ask, can I? Ask, does this make sense for my overall financial picture? Because that's the real question. If this helped you feel more confident about how to think about this decision, make sure you subscribe. And if you want to keep learning, check out one of these next videos.